Welcome back. Now, a surprise rebound for Singapore's factory activities in March. Industrial output rose 16.5% on year, bolstered by the pharmaceutical sector. Analysts warn that the higher output is unsustainable, and that's because they see demand waning as global economies head into recession.
Biomedical manufacturing was the star performer in March, posting the largest increase at 91.4%. This was driven by pharmaceutical production, which more than doubled. Economists say the COVID-19 pandemic could have driven the sector's output. Their outperformance helped boost the March manufacturing output. But economists are also sounding a note of caution. They point to the volatile nature of pharmaceutical output. Production typically takes place in batches and is not sustainable in the long run.
We do think that biomedical is an area that Singapore has a relative strength in, so it's a bright spot really. But then again, I think there is some limit to which biomedical alone can uplift every other sector in the economy. Its weight in total production is below 20%.
That's why, after stripping away biomedical manufacturing, official data shows factory output is flat on year. Even then, economists are surprised that overall factory output didn't dip into the negative. They say the resilience was because firms ramped up production to boost inventory after seeing the adverse impact from China's lockdown. But they think the higher factory production will be short-lived.
I'm very conscious of, number one, the circuit breaker effect on the ability for manufacturers in terms of boosting their or maintaining their capacity on the supply side. And number two, I'm very wary of global demand. In terms of global growth, possibly Q2 is the lowest point. As we go through Q2, probably we are going to see some orders cancellation, etc., coming through from the major economies, and that would certainly affect our manufacturing activity from the demand side as well.
We're likely to see further contraction in areas such as transport engineering and chemicals. As transport engineering, no one's traveling anymore, essentially. And we're likely to see that sector contract even more in Q2. And then chemicals also is likely to suffer because oil prices is just not picking up.
The Economic Development Board has also warned that a pronounced impact from the circuit breaker would show up in April's data.